In the last week or so, my wife Kim and I have decided to move to a different house. We haven't moved for 24 years, and I can tell you that you collect a bunch of stuff after you've lived in a house that long, things you have to sort through before moving. I like to save year-end issues of things from the Wall Street Journal, Bloomberg, Businessweek, and other magazines to see what they were predicting at the year-end in terms of what's going to happen in the next year. The 2019 and 2020 previews were particularly interesting because they were blindsided by COVID-19. There are no shutdowns in sight in those issues. The 2020 and 2021 issues, well, they pretty much missed inflation, and the 21 and 22 issues missed the Russian invasion of Ukraine. Obviously, it's hard to predict the future. You know, these magazines are examples of something called conventional wisdom. Conventional wisdom is kind of that thing where there's a generally accepted belief or opinion out there that people come to accept. We'll hear it quoted often in news reporting about everything from the economy and markets to sports and politics. Now, often when we hear about conventional wisdom, it's couched in the opinion of a group of people who are either in the know or seem to have expertise or experience. Of course, in our polarized media and political environments today, the meaning of expertise and who really knows, well, that's subject to a lot of debate and a lot of disagreement. So what's the conventional wisdom currently regarding markets and the economy? There's a lot of focus on the Fed when it comes to interest rates, recession, and inflation. Conventional wisdom based on actual futures contracts from investors shows that a 25 basis point rate hike is likely at the July meeting of the Fed. And last week, Fed Chair Jerome Powell said we'll probably have 2 of these before the end of the year. An investor and commentator that I've grown to appreciate in the last few years is David Rubenstein. Now, Rubenstein is an expert investor and as the co-founder and co-chairman of the Carlyle Group, one of the most successful private equity firms in the U.S. As a lawyer, Rubenstein was the chief counsel to the U.S. Senate Judiciary Committee and then served as domestic policy advisor in the Carter administration in the 70s. He's become an important philanthropist. He's acquired and preserved and donated many American historical documents and monuments. Needless to say, Rubenstein has some experience and connection with political economics and markets. In an interview I watched with him last week, Rubenstein said that he was in agreement with the conventional wisdom that the Fed will do 2 25 basis point interest rate increases this year, and then sometime in 2024 likely we'll see some reductions unless something unforeseen happens. He added this when talking about the conventional wisdom on the rate increases. He said, and I quote, "This assumes there's no big problem in China, no big problem again in the Ukraine-Russia war. No exogenous things we can't anticipate." And then he went on, "But as some people have always said, the conventional wisdom watch is almost always wrong. But the conventional wisdom is based on everything we know today." You know, the conventional wisdom is so often wrong because unforeseen things happen all the time. Many times every year, as we've seen in the last few years. What I think we can learn from Rubenstein about the conventional wisdom is that while it may be the higher probability path, it is certainly not assured. And in some cases, it might represent only a 51% probability, almost a coin toss. In other words, don't count on the conventional wisdom. Unexpected things will happen, and the conventional wisdom will often be wrong. You know, uncertainty is the environment that we're always in, whether we are aware of it or not. This is true for us as investors, as people trying to stay healthy. It's true as we travel in planes, trains, and automobiles every day. As investors, having a clear financial plan, utilizing diversification, cash reserves, margins of safety to manage risk, and keeping a long-term view when evaluating our stock portfolios, these are all steps to ongoing successful investment experiences. The conventional wisdom can be great to learn from in thinking about our expectations, particularly in the near future, but exclusively relying on it to the point of entrusting our entire success to whatever is the current version of the conventional wisdom, well, that's sure to bring unnecessary disappointments. What the Fed will do through the remainder of 2023 is uncertain. They've given an indication that if nothing dramatically unforeseen happens, as Rubenstein said, no big exogenous events, we should expect 2 more 25 basis point increases by year end. They've also said, though, that they'll respond to the data as it comes in. It's our perspective that as wise investors, we're going to view this conventional wisdom as helpful information, but not the kind of information that would change anyone's long-term financial plans or investment portfolios or even summer vacation plans for that matter. And we do hope you get to enjoy some summer vacation with your family and friends. As always, if you have specific questions you'd like us to address on financial perspectives, please let us know by emailing us at perspectives@fostergrp.com. Thanks for being with us today. We'll be back after the 4th of July holiday. Until then, be well.